you have a particular, you are more than welcome to type in the chat box as well as to stop me while I'm teaching and ask you a question, right? So now what's going to happen is that let me just accept these individuals. Okay, so we will be looking at this question paper, right? So us looking at this question paper, we will be focusing on part B, right? So part B deals with gross income, right? Um, Special inclusions is an extension of the gross income definition, right? So now, before we could start with anything, we need to know what we are talking about, right? If we are talking about the gross income, we need to understand what is gross income, right? So here I am going to do the definition, or I'm going to write the definition for us, right? So technically, gross income, you need to be very specific to the definition, right? Because the definition itself, it is very crucial because everything that deals about gross income, all the court cases, all the special inclusions, they need to reflect to the gross income definition, right? So what is the gross income definition? It is essentially the total amount cash or otherwise received by or accrued to or in favor of such resident, right? So now with this definition, you should not end here, right? It should also be received in this year of assessment, right? So the amount that you will be receiving, right? So now what you need to remember is that, or what you need to note is that amount is not limited to cash. That's why this definition says the amount in cash or otherwise. So this part of otherwise, it means that even bartering, what you receive for bartering is included in gross income, right? So it should not be limited to money, right? Received by, you should have received the money. And now it says or. So if you have not received the money, it should be accrued to you, right? So if maybe you have a formal documentation that says you will be receiving 1 million, right? You are entitled to that money, right? Maybe let's say you were going on a lawsuit and then the court rules in your favor and say the other party needs to pay you 1 million rand, right? So from that court date, you are entitled to the money, right? That money accrues to you, right? So in favor of such resident is self-explanatory, right? So this must be during such year of assessment, right? So it should be during such year of assessment. And to note, if you will be dealing with an individual, the individual's last year of assessment is on the last day of February, right? Then if you are dealing with a company, the year end should be provided to you, right? Okay. So now, another important thing is this definition should, or whatever that you will be dealing with should exclude all amounts that are capital in nature, right? So you should exclude all amounts. So technically, if we apply the definition directly, it would be the exclusion of all receipts or accruals of capital in nature. So what does capital in nature mean? So with capital in nature, we are talking about when you are buying a capital asset, right? So if you receive money for the sale of a capital asset, you are going to exclude it from your gross income. You are not going to include that amount in your gross income. What is a capital asset? The word capital you should think of. So when something is capital, you are planning to hold it, right? It is your capital asset. When you buy a house, it is a capital asset. You are planning to hold it. When you buy your phone, that is a capital asset, right? So anything that you are planning to hold and it is an asset. So whatever income that you'll be getting from that, you are not going to include it as part of what? As part of your gross income, right? Let me just check the chat box before I continue. It says, two individuals are having problems with the sound. Um, okay. So, okay, perfect. I guess you should check your internet connection. Okay. So now let's proceed, right? So now, before I proceed, can I get a thumbs up if your preparations are going well for your upcoming test? How are the preparations going? You are more than welcome to comment. And the things that you are struggling about, please note them in the chat box. I'm going to give you guys 3 minutes. So after this 3 minutes, if there are multiple things that you are struggling with, please note them in the chat box, right? Okay, so I'm giving you guys until 26 past. Okay, so now let's continue. Um, let's continue to the special inclusions part. So now I have seen a quite couple of reactions, people not feeling okay with the preparations, maybe being overwhelmed, but it's fine. So now, to avoid wasting any time, um, we would be now looking at special inclusions, right? So with special inclusions, they just extend the definition of gross income, right? So they just extend the definition of gross income. So these are special inclusions. They extend the definition of gross income, right? So basically, it is amounts that should be included in gross income, right? They are specifically special inclusions. They are specifically included in gross income, right? So with special inclusions, there is a guideline of which amounts are going to form part of gross income or not, right? You have straight guidance. So now they are about um 14, I think 14 special inclusions that you guys are mostly common assessed on, right? So you guys are in almost a detailed question pertaining to gross income. You are assessed of the following special inclusions, right? So now the special inclusions, they have paragraph numbers, right? So sometimes you'd be marked for stating the paragraph number. So now special inclusions are gross income, right? So you need to know special inclusions are gross income. They are just specifically included. For example, now, with regards to gross income, paragraph A, you have what we call annuities, right? So you have what we call annuities. Annuities will be included in what? In your gross income. So annuities, we are talking about periodical payments, right? So we are talking about periodical payments. They are specifically included in gross income definition paragraph A, right? So then we have gross income paragraph B, right? So yeah, you have your almonies, you have your allowances, you have it could be allowances or and or say or maintenance, right? So now if you would be receiving certain allowances from someone particular to you, you would include that in paragraph B, right? But with this one, you should not take it at face value, right? There is additional information of which allowances can you include as part of your gross income definition. There will be other allowances that you are not allowed to include, right? But now we are not going to focus on those allowances that you are not going to include, right? Because of that will be done at a later stage, right? Not in this particular question or in this particular lesson, rather, right? So now we also have gross income paragraph C. So this one, every time if you would be dealing with an individual, this one is going to be applicable, right? This one is the amount that you receive for services rendered. So normally anything that will come in a form of salaries, you would include here, right? But technically, what we need to note about gross income, paragraph C, it is amounts received in respect of services rendered. Then we have gross income, paragraph D, right? But now, before I go to the D part, there is also a special inclusion that is C, and it goes in hand with um, it's CA, and also we have CB, right? So here we are talking about a restraint of trade. So a restraint of trade where you would see it normally, it is, for example, let's say you are working at a Coca-Cola company and now you decide to retire, right? So you decide to retire now. So when you decide to retire, Coca-Cola says, no, you have learned so much from us. So Coca-Cola has the fear that you are going to use what you have learned from them and open your own Coca-Cola company, but with a different name using their own receipts, right? So they are like, no, for the next 15 years, you are not allowed to open your Coca-Cola company. And then they're like, no, Chavo, let's give you 500,000. You are not allowed to open your Coca-Cola company. What are they doing? They're eliminating competition, right? So such things that you are going to receive would be a restraint of trade payment. It will be included in gross income, paragraph CA and CB, but it also has its specific laws, right? So it has its specific laws. So, but we will dive into that later, right? So now, yeah, I'm just stating all the special inclusions that you would get, right? So here we are talking about special inclusions for those who just joined after I have mentioned that we are listing the special inclusions. Okay, then we are going to move to paragraph D. So with regards to paragraph D is any amount that you receive from termination of employment, right? So termination of employment. So should an employer terminate your contract and they give you a certain amount of money, that would be included in gross income, paragraph D, right? So this one has to be provided by employers, right? But you are going to deal with this later in further learning unit, probably later during the year, not very soon, right? So now you also have gross income, paragraph E and EA, right? So with regards to paragraph E and EA, here we are also talking about amounts that you receive when you retire, right? But this one, we are talking about retirement benefit funds, right? So now, when you are working, you normally contribute to a pension fund, right? So those amounts that you are going to receive from your pension fund, they would be included as part of your gross income, paragraph E or EA, right? But you'll also deal with this in detail later during the year, right? So now we're just touching base. And then we also have gross income, paragraph F, right? So with regards to paragraph F, this one is an interesting one. So now, these are amounts that you would receive in commutation of amounts due under a contract. So in the chat box, what do you think this means? Amount that you receive in commutation of amounts due under a contract of employment. What do you think that means? Because of now, we need to understand when we are going to be talking about gross income paragraph F, we need to apply what we know, right? So now, what do you think this means? You can type in the chat box. So, there is a chat. There's a chat. I meant, what does the commutation, amount received in commutation of amounts due under a contract of employment? So, what are we talking about here? So, commutation, we are talking about converting something, right, into a once-off amount. So, you are going to convert something to a once-off amount, right? So, amounts that are due under an employment contract. So, you are going to convert something that is due under an employment contract to a once-off amount. So, now let me help you guys. So, let's say Peter is entitled to receive a pension fund of 10,000 a month for the next 10 years. So the employer says, no, can I give you a once-off payment of 800,000? No. So that 800,000 is a lump sum in commutation of amounts due under a contract. So that 800,000 will be included in paragraph F, right? So, is everyone with me on the same page with regards to um, gross income definition paragraph F, right? So, amount received in commutation in respect of employment, obviously. So, everyone happy with this one? Everyone happy with amount received in commutation in respect of employment? Okay, great. So now let's move on to paragraph G. So with regards to paragraph G, we will be looking at what? Lease premiums, right? So with regards to paragraph G, we would be looking at lease premiums. So lease premiums, most of you are familiar with this one, right? So now lease premiums, it is when you maybe are living in an apartment, and with regards to that apartment, you are renting from a landlord, right? So now it doesn't necessarily have to be leasing of a residential place, right? It could be the leasing of anything, right? So now this is when you are going to give your landlord an amount, right? Let's say a deposit, right? So when you are going to give your landlord a deposit, but it can be contradicted by case laws, right? So let me just say you give your landlord an amount in terms of the contract. Um, so this amount that you are going to give it is not going to be received back, right? So a deposit is different because of you're going to receive it back. And if you dive deeper to the court cases, you will get to a different answer, right? But now let's say in this case, you have to pay a certain amount to the landlord, but that amount you are not going to get it back, right? So normally maybe this would be your once-off fees, right? Your once-off fees, I'm talking about your admin fees, right? So that admin fee that you are paying the landlord will now include that amount in their gross income. So the admin fee that you paid will be included in the gross income of who? Of the landlord, right? So formerly known as the lessor, right? So now moving on to gross income paragraph G cap A, right? So this one is not commonly asked, right? But it is there, but it is not commonly asked, right? So I'm going to show you the ones that are commonly asked a lot, right? So now these are amounts that would be received when maybe you are selling knowledge. For example, during the COVID time, anyone who found the formula of developing the COVID-19 vaccine and decided to know, I'm going to sell the methodology of how I developed this vaccine, right? So that would be included in this person's gross income, right? So basically, this is what paragraph G cap A says, right? So technically, yeah, it is with regards to the selling of scientific knowledge. So yeah, it is with regards to what? To the selling of the scientific knowledge. So now let's go to gross income paragraph H. So with regards to gross income paragraph H, here we are talking about leasehold improvement, right? So here we are talking about leasehold improvement. So now let's say you are renting a 10 house, right? So you are renting a 10 house and then now you be like, no, I am going to make improvements to this 10 house. Maybe I'm going to add a carport for parking. So when you add that carport for parking, now that amount would be included in the gross income of who? Of the lessor or of the landlord, right? So, but this thing should be stated in the contract, right? You can't just wake up and say, no, I am going to put in a swimming pool at my apartment and that amount must be included in the gross income of my landlord. No, it should be stated in the contract that no, you are allowed to do this particular exercise. You are allowed maybe to an extent of 100,000 to um, put in a pool. Then that amount can be included in the landlord's gross income. But if it doesn't state in the contract, it will not be included in the gross income, right? So now we are moving now. Four left, right? So there is also paragraph I, gross income, paragraph I. So with regards to gross income, paragraph I, we are talking about fringe benefits, but this ones we don't need to focus on them because of you will focus on them greatly so and for a long period later on during the year, right? As well as the other one that I'm going to mention, gross income, paragraph JA, right? So with regards to gross income, paragraph JA, this is when you are selling a capital asset, right? So this one is with the sale of a capital asset, right? But to know which one applies, this will be dealt with later, right? So normally this would apply when you are a furniture manufacturer, and now you being a furniture manufacturer, you took some couches and you use them in the business, right? You use them for the purpose of the business, not for selling, right? But the day when you sell those couches, they would be included in your gross income paragraph JA, right? So, sale of certain uh, capital assets. Now, moving forward, we have gross income paragraph K, gross income definition paragraph K. So now with gross income definition paragraph K, here we are dealing with dividends. So here we are dealing with dividends, right? So now here we are talking about you including all the dividends that you have received, right? Both locally and internationally, right? So now, finally, before we dive into the question, we are looking at gross income, paragraph L. It could also be M, N, etc. going forth, right? So let me do this. Other special inclusions, right? In gross income definition, right? So this ones, they need to be specifically stated, right? But as a third year student, I am not going to focus on these ones, right? Other special inclusions that will be included, right? I am not going to focus on them deeply. So now, what I need you to fully understand, in terms of this special inclusions. Paragraph A, it is a common one. Paragraph C, almost very common. Paragraph C, A and CB, common. E and E, A and F is common later during the year. Lease premiums is common. Leasehold improvement is common. Fringe benefits, very common, but later during the year. Sale of certain capital asset, this one is a 50-50 chance. Dividends, very common, right? So those are the common special inclusions that are often tested, right? So now, what I want us to do, since we understand the special inclusions, they just extend the definition of the gross income. We understand that the gross income definition, it is talking about a total amount. Total amount is not limited to money. It could be anything, right? That is received or accrued to by the taxpayer, right? And this taxpayer, in this particular lesson, we are focusing on a taxpayer that is a resident of South Africa, right? A resident of the Republic. And we know that any amount that is gross income should exclude capital in nature. What do I mean by capital in nature? I mean your capital assets. What are your capital assets? Your house, your laptop, your phone, etc. Things that you buy to keep, right? So now, Sandile says, please repeat. What must I repeat, Sandile? Um, Kindly provide the context of what you want me to repeat. Okay, so now, meanwhile, we wait for Sandile. Let's go deeper now. Here's a message. Or I should repeat the special inclusions that you will be usually tested on. So you will be usually tested on paragraph A, which is your annuities. Paragraph C, amount received for services rendered. Paragraph CA and CB, restraint of trade. Paragraph D, but at a later stage. Paragraph E and EA at the later stage. Paragraph G, paragraph H, paragraph I, but at a later stage. And JA is a 50-50 scenario. Paragraph K, you'll be tested. So now let's go deeper into the special inclusions because of now there are certain formulas. Remember, yeah, I just gave you guys a broad overview, right? Because of now, this lesson was not going to be sufficient enough for me to actually break down each paragraph to its extent, to its fullest extent, right? I can go deeper into leasehold improvements, the formula. We can go deeper into how fringe benefits, but not important for now. I want us now to look at this question so we can go deeper into that special inclusion, right? So we would be looking at paragraph B, right? So as much as we have paragraph A and B, it is always important to read the background information of what you are dealing with. You need to understand the particular context of the question before you attempt, right? So now let's read. It says, Monate. Before I start with this question, anyone who has questions pertaining to the special inclusions or the definition itself, any questions that you have, you are more than welcome to unmute or type in the chat box before we continue with this question. Okay, there are messages in the chat box. Please summarize definition of special inclusions. So technically, there is no definition of special inclusions. So special inclusions are the extension of the gross income definition. So what do I mean by that? Special inclusions are things that are specifically included in gross income. There is a specific paragraph. So that's why they call them special. There are specific paragraphs of why they should be included in gross income, right? So there's a question, it says, this special inclusion, is it for individuals only? No, special inclusions apply for companies as well as individuals, right? They apply for both companies and individuals. So could you highlight special inclusions that will be dealt with in the upcoming test? Okay. In the upcoming test, no, that's a different story. I can't highlight the ones that will be coming in the upcoming test, right? The scope that I will be providing of what's going to be coming in your upcoming test will be in the bootcamp class, right? So the bootcamp class that's taking place during this weekend is where I'll be showing you guys things that are going to come out or that are going to appear in your test. So now, nonetheless, let's continue with this particular question. So now, Monate manufactures sweets in Cape Town, South Africa. The company's manufacturing process has been approved by SARS as a qualifying process of manufacture. The company is not a small business corporation as defined in the income tax. So later during the year, you'll start to notice when they are talking about, not later during the year, very soon now, or those who have started to study ahead will note that when they are saying that the company is approved by SARS as a qualifying process of manufacture, they mean that you can start applying Section 12C for capital allowances on those machines that are in manufacturing, right? But nonetheless, let's continue. So when they are talking about the company is not a a small business corporation. Later during the year, or in the upcoming month or so, you will note that when they say a company is not a special corporation, you would apply a different. When they say company is a special corporation, you would apply a different allowance rate, right? So as much as they are saying that SARS said this is a process of manufacture, you would apply 12C, right? But if it was a small business corporation, you would apply 12E for allowances. But not to confuse you guys, that will be dealt with in the upcoming month or so, right? So now, the company is registered as a Category A value-added tax vendor, making only taxable supplies. Monate's financial year ends on the last day of January. Shirley Masete, 55 years old, is the financial director of Monate Ltd. She owns a vacant plot of land in Drakensberg, which she inherited from a late father. So we are going to skip part A, although it is good practice. We are going to do part B, right? So now, part B. Before we read the scenario, we need to understand the purpose of why we are reading the particular scenario. So how are we going to obtain that information? We are going to obtain this particular information in the required. So we need to read the required to obtain an understanding of why we are reading the scenario. Because if it is always great to know why you are reading something, you cannot just read for the fun of reading, right? Okay, required A. It says discuss with supporting calculations which amount will be included in or excluded from Shirley Masete's gross income for the current year of assessment. Provide brief reasons for your answer. Right? They want reasons. So now, what I used to love doing as a student is that this question, I used to love to break it down, right? I used to say, okay, in this question, they are asking me, it is one required, but they are asking me a couple of things. So what are they asking me? Number one, they want me to discuss. Number two, they want me to give calculations, right? Number three, they want me to do what? To provide reasons for my answer. So now, this question, when I'm going to be answering it, I need to think of these three things at the back of my mind, right? So I need to think of these three things. So nonetheless, let's read the scenario. At least now we know why we are reading this particular scenario. So it says, Shirley Masete received the following amounts during the 2022 year of assessment. On the 1st of July 2021, Shirley purchased an annuity for 350,000 to secure her retirement income. In terms of the purchase annuity contract, Shirley was to receive an annuity of 2,500 per month for 15 years with effect from the 1st of August 21. Remember, Shirley Masset, we are dealing with an individual, right? So the last year of an individual, or the last day of the year of assessment of an individual is the last day of February, right? So 2022, I don't think it was a leap year, right? So meaning that the last day of this person would be 28 February 2022, right? So whatever that we will be reading here, we need to apply. So obviously, if this is the last year, if this is the last day, it means this person's year of assessment would have started on the 1st of March 2021. So now, this will now help to understand that this transaction, the 1st of July 2021, is within this range, right? It is within this particular 12-month period. Okay, so on the 1st of July 2021, I have read this. 1st of July 2021 is within that range. 1st of August 2021 is within this range. Right? Perfect. So now let's continue. Point number 2. There's a question in the chat box. Will the recording be available after class? I'll let you know. So point number 2, Shirley Masete entered into a lease agreement with Anika Fester on 1st July 2020. Anika Fester was obliged to erect a particular 3-bedroom house on the plot that Sherry inherited from her late father for a minimum amount of 2,300,000. The lease period was for a 25-year period. Building commenced on 1st August 2020 and the house was completed at a cost of 2,500,000 on the 31st of October 2021. It was occupied immediately by Anika Fester. A monthly rental of 3,500 was payable by Anika Fester to Shirley Masete, commencing on the date the lease was entered into. Shirley Masete inherited a cash amount of 500,000 from a late father. During September 2021, Monate Ltd provided a year's supply of suites to Constructo Pty Ltd, in return for which the company, being in the construction business, made certain extensions to Monate Ltd's factory to increase its production capacity. The director of Constructo Pty Ltd and Shirley Masete have been friends for over 20 years. The direct cost for Constructo Pty Ltd to affect this improvement was 120,000. Monate Ltd requested a quotation from another construction company. So the arm's length transaction, which amounted to 108. So when they talk about the arm's length here, they are talking about a market-related price, right? No need to be confused. So the construction extensions were completed on the 31st July 2020. Very interesting. Very interesting. So now, I am going to answer this question based on each particular transaction. I am going to answer this question based on what? Each particular transaction. So, remember, we need to do what? We need to discuss, we need to calculate, we need to give reasons, right? So now, moving forward, we are going to start. We can start anywhere with this thing, right? We can start anywhere. But I would love to start with number one, right? So, taking note, we are dealing with the sharing asset. So we are dealing with sharing asset, right? So Sherry purchased an annuity. Sherry purchased an annuity. So now we are dealing with the purchased annuity, right? So we are dealing with the purchased annuity. So now remember I said I cannot go deeper into everything, right? So this is where I'm going to go deeper into this purchased annuity, right? Because if I went deep into everything, we would have finished this class by 12 midnight, right? And we can't do that as people have to go to work tomorrow, right? So before 9 we should be done, right? We should be done with everything before 9. So now, with regards to this purchased annuity, so when we are dealing with a purchased annuity, we need to note, right, that the capital element or the capital portion is exempt. We need to understand this part. The capital element or portion is exempt, right? So if it is exempt, I'm not going to include it in my gross income because I don't want to tax it, right? So now, here is where it gets fascinating. For you to be able to do this, you need a formula. You need a formula to answer this question, right? The formula will be as follows. So you need to know this formula, right? So this formula is written as Y, and this is written in terms of the legislature, right? So tax is very specific to their formulas. They are not like costing and financial accounting, right? So now the formula is Y is equals to AB over A over B multiplied by C, right? So now what is my Y, right? So my Y, okay, let me do this. So what is my Y? So my Y is the answer that I'm looking for, right? So now let me do this. Okay, but it's fine. My Y is the answer that I'm looking for. What is that? I'm looking for the capital element, right? So now, as much as I can include this annuity, all of it in my gross income, I need to remove what? My capital element. I think I should have started there. The annuity amount is fully included in what? In my gross income. However, capital element, capital portion is exempt. That's why I am doing this formula. This formula is for me to calculate the capital amount, the capital element that I should exempt, right? Here I am calculating the capital element that I should exempt. The annuity is fully included. It's just that I have to remove the capital element. If there was no capital element, I would have just taken the annuity amount and included it, right? So there is a comment in the chat box. Sharon says, we say it is a capital element because of it was purchased. Perfect. Yes. The only time you would have a capital element is when you do what? When you purchase, when you incur cash, right? Not necessarily cash, but when you incur an outflow from your reserves to obtain that particular item, right? So now, capital. What are we looking for? We are looking for the capital element, right? So with regards to A now would be what? A would be the amount payable by share, right? So A would be what? Amount purchased by, right? Or amount, the purchase amount, right? In simple terms, right? So now I would write purchase amount. Then I have my B. So with regards to B, what about B now? So B, we are talking about expected returns. Where's this thing typing? Okay, expected returns. So here we are talking about expected returns. So what am I talking about expected returns? So sharing would be what would be receiving 2.5 per month for 15 years, meaning that the expected returns would be 2.5 for every month for 15 years. Obviously, that would be 2.5 multiplied by 12 because of I'm representing the full year, multiplied by 15 years because of I'm representing 15 years, right? So now, C, right? So I am done with the expected return, right? So now, C, what am I talking about? I am talking about income received in the year of assessment. Remember what I said earlier on? We are dealing with the year of assessment, right? So everything needs to align to the current year of assessment. So C, it talks about income received in the year of assessment. So this is the formula. This is the formula, right? So now, where people get it wrong is now everything that I'm doing now, I have to align it with this current year of assessment. Because of remember now, what is my purpose now? I'm dealing with gross income. Gross income says what? The total amount during such year of assessment. The total amount during such year of assessment. So now, whatever that I'm going to apply here, I need to apply with the current year of assessment. So now, this started when? On the 1st of July 2021. So now, how many months am I left with in this current year of assessment? I am left with July, August, September, October, November, December, January, February. Right? So now, yes. So now, when we purchased this thing, it was we were left with 8 months, right? Okay, fine. Now, the examiner says again, Sherry was to receive the annuity from the 1st of August 2021. So, as much as we purchased this annuity when 8 months was left, we need to consider the income, the date of the income. Remember now, definition. What does this definition say? Total amount received or accrued in this year of assessment. When was this amount received? It was received on the 1st of August. As much as we made this purchase on the 1st of July, we need to take what the date of receival. The date of receival is the 1st of August 2021. So the 1st of August 2021, how many months are remaining now? August, September, October, November, December, January, February. 7 months. Right. So now, 7 months. Okay. So the purchase was 8 months left in the year of assessment. But now the income was 7 months left in this year of assessment, right? Okay, now let's do our calculation. We are going to do our calculation based on what? Based on our formula. We are going to do this based on what? Based on our formula. So now Y is the answer that we are looking for, right? So what is our A? A is our capital element. What is our capital element? It is the amount that you purchased for. There's a message in the chat box. Sorry about that. Is a purchased annuity, is it an asset, right? So now, I can give you a straightforward answer as it being yes, but it is risky. So because of there are provisions that contradict some purchased annuities from being an asset, right? So there are some things that limit it from being an asset. So I don't want to rush the in-depth understanding of purchased annuity being a capital asset. But in this case, we should only focus on the gross income, right? Because of now, if you are looking at it from an asset, now we need to consider the eighth schedule, right? So we need to consider the eighth schedule, which is the capital gains tax, right? So, and capital gains tax has its own definition of what's an asset, right? So an asset would include something that is incorporeal or corporeal, right? So incorporeal, it means it is intangible. But I would love to go deeper into this being an asset when we do capital gains tax, right? But you will not be assessed on what is an asset now because of you haven't dealt with capital gains tax, right? So if we have time after this class, I would elaborate on this. I don't mind elaborating. Okay, so for the sake of time, let's continue with this transaction. So now Y is a capital element, right? We are talking about we are talking about the purchase amount. This is where I was. So the purchase amount. How much did we purchase this annuity for? We purchased it for 350,000. Right. So what is the expected returns? So what am I expecting to get? So remember, we are expecting to get 2,500 over how many months? 12 months, right? Because of it every month. For how many years? For 15 years. So now, what is my expected return? Let's calculate. 2,500 multiplied by 12 multiplied by 15. I am expecting to get 450. So now I am going to divide by 450. That is my expected return. Now I need to multiply by C. What is C? Income received in this current year of assessment. Remember, I have 7 months in this current year of assessment, right? So now the first income started on the 1st of August 2021, meaning that this year I will receive 2.57 times, right? So I will be receiving what? 2.57 times. So I will take this 2,500 multiplied by 7 times. And this would give me what? Let's do it. 2,500 multiplied by 7. This gives me 17,500. Right. So now this becomes 17,500, right? So now I need my capital element. Remember, my main goal is to calculate Y. Why am I calculating Y? I need the capital element. Why am I calculating the capital element? Because of I want to exclude it from my purchased annuity, right? So I need to exclude it, right? Okay, so now when we go deeper into this, right? Okay, but let me calculate this amount first. 350 divided by 450. So this gives me 13,611, right? So now, okay, let's think of the perspective that we are dealing with. We are dealing with gross income, right? We are dealing with gross income. So what is my gross income for the year in terms of this transaction? My income is 17,500. But now, when I am dealing with this annuity, I need to remove what? My capital portion. Me removing my capital portion would be what? Removing this 13,611. That is my capital portion. We remove it. Then what is my income? So my income now would be 17,500 less 13,611, being 3,889. So this is what I would be including in my gross income, right? So let me just, can I take questions now pertaining to this first transaction? Okay, Google Anna, thank you for the answers. Kumoto says, can you please repeat the 17,500? Okay, so the 17,500, let's do it. So 17,500, right? I have income that I will be getting of 2,500 for how many months? For 7 months, because of 1st of August, 1st of September, 1st of October, 1st of November, 1st of December, 1st of November, 1st of February. Year of assessment of an individual ends on the last day of February. So I won't be getting the one on the 1st of March 2022 because of that will fall into the next year of assessment. Why? Because of gross income definition only is interested in the amount earned during in this year of assessment, right? Okay, so now 2.5 multiplied by 7, it gives me 17,500. This is where I got the 17,500. Who asked this question? Okay, Onge says, can you please repeat the 450,000? Okay, so if you are happy with my answer, Homoto, you can react or comment. Okay, you are happy. Okay, pleasure. So now, how I got this 450,000? How I got this 450,000? We are talking about what? 450,000 is what? Expected return. So from this annuity that I purchased, how much money am I expecting to get? So that is my expected return, right? So now this annuity, I will be getting an income of 2.5. So as I state, so we would be looking at 2,500. I'll be getting this 2,500. For how many months or for how many years? For 15 years, rather, right? But now this 2.5 is per month. So that's why I need to multiply with the 12, representing that this is a monthly amount, right? So now this will give me the 450, right? So this is how we are going to get the 450,000. If you are happy, you can comment on it. And then now Anna says, why are we subtracting 13,611? So the 13,611, it is the capital element. Remember, we have to exclude the capital element from the annuity amount that we will be receiving. So if we didn't make any purchase, we were only going to include the 17,500. But now since we purchased this one, we need to remove the capital element, right? We need to remove the capital element. The capital element, we need to remove it. And how are we going to remove it? We are going to remove it in a pro rata way based on this formula, right? So we need to apply this formula and remove the 13,611. So we need an income remove cost, right? So in simple terms, if you are running a spicer shop and you buy your stock for 13,611, you get income of 17,500. The What is your net income? Your net income would be the 3,889. You wouldn't want to um, use the 17,500 as your income because of this other amount is your cost, right? It wouldn't make sense for you to say, no, the 17,500 is my full income. No, it wouldn't make sense. Okay, this is why we have to remove this. Income less cost would give you your gross income, right? So, and if you think of this thing in accounting, remember gross profit. So you would take what your sales less cost of sales if you were to think in that way. But it is not the thought process of tax. But if you were to think of that way, did I answer your question? Who asked this question? Anna. So Zukanya says, is the formula only used for annuities? Yes, in this particular case, this formula is only used not for annuities, for purchased annuities, right? Only purchased. But annuities that are not purchased, you just include the income that you'd be receiving. We would have just included this 17,500 that you would be receiving, right? So if you are happy with that, Zukani, you may also comment. Okay, now moving forth. So whatever that we have done there, it is a quick, easy 7 marks, right? So now, um, moving on to number 2. So number 2, right? So with regards to number 2, we are talking about a lease agreement that was entered with Anika Fester, right? So Anika is the lessee, right? So Sherry is the lessor, right? So this is what I was talking about earlier. So now, Anika is the tenant. Sherry is the landlord, right? So in terms of the contract, right? In terms of the contract, it says here, Anika Foster was obliged to erect a particular 3-bedroom house on a plot, right? So the cost of the house was 2.5 million, right? So this was a straightforward one. It wasn't challenging, right? It wasn't challenging. So now, when we think of sharing, what are we going to do? We are not going to talk about the plot because of it was received long time ago and it doesn't even trigger gross income because of it is a capital asset, right? So that's not the point of this transaction. The point of this transaction is the erection of this 3-bedroom house, as well as what the rent received. Because of they are seeing a monthly rental of 3,500, right? As much as this question said I should discuss the reason, my discussion, I am saying it in words, right? I'm not actually putting it down to paper, just for illustration purposes, right? But if I was actually doing a test, my thought process would be documented on my answer sheet, right? Okay, so point number 2. When we are talking about this lease improvement, this is a leasehold improvement. And what is leasehold improvement? Leasehold improvement is this one, paragraph H that we mentioned, right? So leasehold improvement is what? As paragraph H. So leasehold improvement, the amount that should be included is the amount that the lessor paid, right? So now, this one is a simple one, right? So the amount that will be included in terms of the leasehold improvement would be the full 2.5 million. This one is a straightforward one. So here I want to show you that we don't necessarily need to apply the formula, right? So we don't need to apply which formula? This annuities formula. That was based on the calculation of purchased annuities. But now, when we calculate the leasehold improvement, it is fine. There's no need. There's no calculation. But there is a calculation for leasehold improvement, right? But now, it is not in this particular question. There is an alternative to it, but this is when other things are also implicated, right? Okay, so now the other part, it says a monthly rental of 3,500 was payable, right? When is the commencement date? On the date the lease was entered. So the commencement date is what? The date the lease was entered. So when was the lease entered into? When was the lease entered? So the lease was entered on the 1st of July 2020. So which is in the prior year of assessment, not in this current one. So meaning that in this current one, this thing was leased for the whole period, right? So now rent income would be the 3,500 multiplied by 12. So what will this be? Let's calculate 3.5 multiplied by 12. So this would give me 42,000. Right. That would give me 42,000. So this is transaction 2. Very easy and simple. Now let me read what's in the chat box. How to calculate lease improvement since it is capital in nature. Here we would be looking at okay, so now Bia says how to calculate lease improvement since it is capital in nature. Right. So now remember, here we are talking about special inclusions. So here we are talking about inclusions that are specifically included, right? These are required by legislature. So these are special inclusions that we have to include. So the part where we are going to consider the capital in nature part, it is when we are going to be thinking from a expenditure perspective. This is when we will be looking at capital, the base cost, right? When we would be thinking of the base cost, this is when we would need to capitalize this thing to the cost of this inherited plot. But that will be more when you deal with capital asset, not in gross income, right? So you should not confuse the perspective, right, that you're looking at. So with leasehold improvement, when you are dealing with gross income, you would be looking at what the lessee incurred on that building. Because of now, that money, that improvement, it is essentially money coming from the lessee to you to construct. So the income, remember now our definition of gross income. Gross income, the total amount in cash or otherwise, right? In cash or otherwise. So it doesn't mean that you have to receive money from the lessee for it to be your income. This otherwise part, it means that you can receive money in the form of property. So now you have received money, or not money, you have received an amount in another form, not in money, right? You have received it in terms of what? In terms of a 3-bedroom house. So it is your income from the lessee, from the tenant. Does it make sense, Bia? Or you want me, or you want to ask it in a different way? Anna says, why are we multiplying 3.5 with 12 months? Because of this rent was received for 12 months. This lease was entered into the 1st of July 2020. It says the lease commenced on what? The rent was received starting from the commencement date of the lease. The lease agreement was entered onto the 1st of July 2020, which is in the prior year of assessment. In this current year of assessment, this person Anika Foster rather, has been paying us rent every month from the 1st of March 2021 till the 28th of February 2022. So this person paid for every month. How many months is it from the 1st of March till the 28th of February? We have 12 months. That's why we are taking this monthly. It is a monthly rental. It is not an annual rental. That's why we multiply it with the 12. Right. Yeah, Bia says yes, but difficult to grasp. Yes, I do understand, especially by the time when you start dealing with, I think you should have already started with general deductions, right? Um, with general deductions, especially now when you are going to include the lease implications in general deductions, and you also think of them in a gross income perspective, it can get confusing, right? I understand you, Bia, but you will be sorted. I have faith. So now, being on to number 3, right? So now, number 3, it says Sherry Masete inherited a cash amount of 500,000 from a late father. So this is an inherit, right? So inheritance, anything that you inherit, right? Inheritance money, you are not going to include it. It is excluded from your gross income. Why is it excluded? Because of it is capital in nature, right? It is capital in nature. So any amounts that you inherit or anything that you inherit, it is capital in nature. It is not income, right? It cannot be income. It is inherited, right? Inheritance is capital in nature. So now, based on my promise, okay, now, anyone who has questions on what we have covered up to now? There's anyone who has questions? Okay, so now, um, you you are more than welcome to ask me any further questions, but if there are no further questions for today's class, you could also, okay, now a lot of people want the recording. I see even WhatsApp messages are coming, right? So, even WhatsApp messages are coming. So if you guys want the recording, I will gladly share to you guys, right?
Good evening, sir.
Evening, how are you?
I'm good. I wanted to ask regarding the leasehold improvement.
Yes.
Um, if there was an amount that they agreed on, or like let's say they agreed to say she can improve up to an amount of 2.4 million, and then the lady used 2.5. Do you take the 2.4 that was agreed upon, or the amount that they actually used? Because here I don't see an agreement of how much they agreed that the, the improvements are going to cost.
Okay, great question. So now with lease improvements, right? So we are going to focus on the amount, right? As per lease agreement, right? So now this they did not agree on any amount, but in terms of the lease, what did they say to us? In terms of this lease, they said, Anika Foster was obliged to erect a particular three-bedroom house. So now, what are they saying? So it doesn't matter the cost in this case. They want a particular, so a specific three-bedroom house. So now we need to use the cost because of what it was agreed upon. It was what agreed upon in terms of the contract. So we need to focus on what's agreed upon in terms of the contract. So there are messages in the chat box, right? Balsa says we don't need to calculate the leasehold improvement. No, you don't need to calculate the leasehold improvement in this case. There is no excess amount. We are not dealing with general deductions where we need to go a further step. In this particular case, Palisa, we just include the cost, right? So Tsakani says, what about the 2.3? So this is a past event. Remember, they are saying Sherry inherited this thing from a late father, right? So Sherry inherited this plot from a late father. So this is a past. It doesn't relate to this current of assessment. Why? Because now it says um, she owns a vacant plot of land which she inherited from a late father, right? And even if it related to the current year of assessment, this is an inheritance. It is not income. It is what? Capital in nature, right? So even if it was in this current year, it wouldn't apply. Inheritance capital in nature. Land is also a capital asset. So yes. And then Tsakan also says, why are we using the amount of 2.6 rather than 2.3? Or you meant the 2.5? The 2.3 is the value of the plot. It has nothing to do, or the amount that was inherited, the cost of the plot when it was inherited. This 2.3 has nothing to do with the three-bedroom house. The three-bedroom house that was erected has nothing to do with the plot. These are two separate transactions. The inheritance is capital in nature, separate transaction. The 2.5, that was the cost by the lessee, the separate transaction income from for the lessee, for the lessor rather, right? And yeah, the rent income also a separate transaction, right? Is everyone happy in the chat box with what I've said? Based on the questions that I got. Okay, thank you. So now this brings us to the end of today's class. Good night, everyone.
Good night. Thank you.
Thank you. Good night.